been about digital for you. You've pumped in billions of dollars to upgrade your technology. Talk to us now. It's about unlocking value. Does it make sense for you to be spinning off your digital bank from your traditional bank?
Well, Haslinda, we actually gave some guidance, if you remember the last couple of quarterly results, that we think that we are in a good position today to actually consider some of what you suggest. If you look at our journey in the last 7 years now, we made a concerted effort to digitize the core banking operation. And frankly, we've had a tremendous degree of success. We've built a lot of technology muscle. We have extremely good core capability. We see ourselves as at least a mid-sized technology company with 10,000 engineers in the bank. And so cloud-native architectures, data strategies, ecosystem possibilities, we've done a lot of that. And you can see that in the growth of our market shares, the improvement in our return on equity, our broader outreach into our customer base. But as we look forward, we do think that there are a couple of additional opportunities. One opportunity is really leveraging our technology strengths to participate in some new kinds of businesses and opportunities. In the last year, in the course of the pandemic, as was just pointed out, we've used some of our technology muscle to create new business activities. We launched the carbon exchange in partnership with some partners. We launched DDEX, our crypto exchange, in partnership with the Singapore Exchange. We launched a company called Partior, which focuses on using blockchain to reimagine international payments and settlements. Each of these leverages our technology to create new opportunities and new revenue streams. At the same time, we also recognize that we have built a lot of capability inside the bank, which is a little bit invisible because it is embedded inside the core bank. Our money transfer business, for example, we call it Remit, is a great case in point. We have a lot of good volume. It's a very profitable business. And if at some stage we could unbundle it from the bank and give it life of its own in a separate legal form, legal entity, we think that that could lead to much better price discovery and value creation. And so, fortunately, the way we've constructed the organization in the bank...
Piyush, might you spin off your digital bank the way Siam Commercial Bank is doing?
Well, Siam Commercial Bank is not spinning off a digital bank. If you think about what they're doing exactly what we've been doing. They've had to spin out and create a holding company for holding all of the assets, of which the bank will be one. We already have the structure. This is what I was trying to explain to you. We have the structure. We have a holding company. The bank is just one entity in the holding company. We also have a separate company called DBS Innovations, which is holding many of our new investments. Partior, the crypto exchange, the carbon exchange, all reside inside DBS Innovations. And therefore, each of these is a legal entity which can actually raise its own capital and be able to create a price discovery separately. The additional thing the Siam Commercial Bank announced is they will take some components of their core bank and spill that out, or potentially spin that out in the future, which is not dissimilar to what we've already advised that we might be able to consider doing as well. So the difference might be in the details. Which parts of the business do you think are appropriate to spin out and which are not?
You talk about your digital exchange. I want to pick up on that, a platform that allows for crypto trading. I'm just wondering what you make of China's clampdown on digital assets, digital trading, digital mining. Your thoughts on that?
Well, I think this whole journey of how do we move to a new form of money and a new form of assets is going to take time. These are not easy transitions to make. In its nature as money in particular, I think there is a pathway for having digital money, but it will obviously face serious headwinds because it comes in the face of monetary policy challenges, macroeconomic challenges, etc., KYC, AML challenges. So digital tokens as a means of medium of exchange or unit of account will be a little bit choppy. I think central banks will have a role to play and they'll probably want to issue their own CBDCs. Digital assets as a store of value, a la Bitcoin, Ethereum, Ripple, etc., might also see some choppiness. But I do think that given there's a couple of $1 trillion of it floating around, it's already got some roots. Now, if you look at what we've done with our approach, we've taken a cautious approach, just keeping an eye on this tremendous uncertainty in the regulatory landscape. So we've not created an exchange which is available to everybody in the mass market. We've been deliberate. We make it available to accredited investors and institutions.
Right.
And we're trying to proceed with it which in a way that allows us to benefit from the regulations and the regulated nature of entity that we are. And so far, we're quite pleased with our own progress.
Piyush, China's clampdown has been the black swan for investors for the most part of the year. How exposed are you to Evergrande, and what provisions are you making for it?
Now, we have no exposure to Evergrande, is the short answer. Our own strategy on China for the last several years has been built on building independent credit decisions and credit underwriting. We don't rely on notions of too big to fail or state support. And so as a consequence, even through the entire pandemic, the last couple of years, we've kept our noses relatively clean. We've not had any meaningful or material credit issues or challenges. And frankly, you call it a black swan. Some of it was unexpected. The timing was unexpected. But the notion that over time, the Chinese would start putting regulatory processes in place around many of their sort of unregulated sectors, I think that writing was on the wall. And even in the last couple of years, the P2P space, they brought in regulations. Over 3,000 P2P companies shut down. And they started creating a set of regulations around a lot of other technology sectors. So I think over time, they're trying to see how they can create a more regulated industry broadly, and in some ways level the playing field.
Piyush, just one final question. I mean, despite what you're saying, could Evergrande be a systemic risk for the Asian banking industry? Do you see that happening, having an impact?
I don't think a lot of Asian banks have a lot of exposure. Their exposure is in the bond market, but the total US dollar exposure is about $20-odd billion last I read. I don't think that's going to destroy the Asian banking industry. A lot of the exposures are domestic in China. But I do think that, one thing this might be a seminal moment in is a broader recognition of something that we at DBS have been doing for several years, is the recognition that counterparty risk in China is important, and you can get idiosyncratic issues. And therefore, I think a lot of people, investors, are going to be much more careful about relying on state support or relying on size and relying on too big to fail. And so that might prove a damper in terms of the amount of money that flows into China indiscriminately. Now, if you ask me in the medium term, that's probably a good thing. In the short term, I think it might create some degree of disquiet.